I mean, if you look at today's volatility, especially in 2016, where we've had a massive drop in the index. Today it's around 6,400, 6,500 level. The thing is, especially for newbie investors or those who have been investing for a year, my biggest advice to you is that you cannot be scared. Okay, if you're gonna sell in this type of occasion, this is not a selling market. This is actually, you have to switch your mindset and look at this as a very good opportunity to be buying. Yes, we're seeing today is heavy volatility, but when we talk about bear markets and you talk about recessions or bear markets in general, there are different criteria that we always look at. And just to summarize those four, it's usually bear markets are consistent because one, it's a recessionary environment where the economy is really in slowdown, which is definitely not the case in the Philippines. Two, you have commodity level spikes, but in reality, it's actually all the commodities are actually declining to. So we've seen oil go from $100 barrel, now it's $30 barrel. Copper, gold, silver, all these different commodity prices have fallen a lot. So that's number two. And most importantly, number three is where I personally see the biggest challenge for today's financial markets. And it's what we call excess valuation, meaning expectations for stocks are actually generally high. Okay. Now, out of those three, it's actually the third one where we see risk. But in reality, if you look at excessive valuation, there was always a reason why we were always in excess valuations, meaning the Philippines was always trading at a premium because if you look at regionally or in globally, everybody loves the Philippines. So you have strong domestic consumption, driven by OFW remittances and the BPO sector. While there are some notions about slowing OFW remittances, we still believe that the BPO and regular domestic consumption will outweigh the short-term effects of the OFW. Now, the thing is, these secular trends or these long-term trends are still here. And investors, small investors and big investors need to believe that it's still here. We are still in the demographic sweet spot, okay? Meaning our GDP and economy is still growing by 6 to 7%, even for 2016, even going through an election year. Yes, we have short-term risks such as political, who's going to win for elections, but I do believe these are all short-term risks that we have right now. And you have to look at this as a very, very good opportunity to be buying and to looking for which stocks, which sectors will benefit the most. So my advice to small, make sure you focus diligently, look at the companies, study them carefully, pick those companies that even through global recessions that they will still be resilient. So we're talking about the malls, your consumers, your SM Primes, your Ayalas. Our secular trends such as offices, so you have their mega world, okay? And then the third one is your diversified conglomerates, which I think out of all of this will probably be the best buys out of all. So you have your Ayalas, SMs, your GT Cap, and then your JGS, which I think they're all good quality buys.